Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we're about 10 off of the highs from Friday, back into the 9-day simple moving average down in 2067, 2068, which has proven to be lately fairly reliable support. I mean, you look at this here, it's just kind of ridden it. The bands continue to get tighter. The Bollinger Bandwidth is under 3 now at 2.93. What I'm looking for this week is a move either as a function of time or as a function of price back to the middle band, which is currently basically 2055 half. What I mean by that is this. The middle band is a 20-day simple moving average. It's a moving average, emphasis on the word moving. If we persist up at these levels and we continue to shed lower prices, the average will continue to rise. We don't need to go anywhere in order to test the middle band. We can grind up here as we've been doing for the last 3 or 4 sessions, and the middle band will come up to meet price. That happened a lot in 2013, where we would go ahead and do a moonshot, and then we would just kind of, chop around on a shelf, and the middle band would come up to meet us. We would test it, and then we would go. So when the middle band does arrive, either as a function of time or as a function of price, it's going to be pretty much a watershed moment for the month of December. December is going to decide if it wants to trade above the middle band or below the middle band. Based upon what we've seen for the last 30 days, you have to give the edge to the bulls here. We could still break down below, could absolutely happen. We were very overbought on a number of metrics. But the one metric that doesn't seem to want to budge, at least not much, is price. We retraced 1% from the 2075 highs. We did 1%. It wasn't enough for anybody that wanted it, but that's what we did. And we went back up and we made new highs. So do we retrace again? Do we do another, another 1%? We do another 20 handles down? We're already down 10. We do another 10, come in at a test of the middle band. Sounds reasonable to me. And the bears haven't done anything from a price action wise, from a trading perspective in the last month to think that we would do anything different. There's nothing different about today that's been versus the last 10, 15, 20 days. Every metric that comes up, every concern, ECB, jobs report, etc., seems to be, spun in a positive light, moved out of the way, and price continues to head higher. So you can fight it, or you can try to get with it. Now, about the time everybody decides they don't want to fight it anymore and decides to get with it is when we really are going to have a fairly significant, maybe 2% or so pullback, maybe as much as the lower band. But, until that happens, you have to assume that these dips are going to be bought, use stops, control your size. But, if you're not giving the nod to the bulls, then you're trading the market that you want rather than the market that you have. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.